Good day, good day. How are you doing? I hope you're good. I'm just going to try and do a refined lesson on the TDI. I realized when I did the other TDI lesson, I was a bit tired. So my way of delivery might not have been a bit understandable. So let me try to do another lesson today. So I'm just going to touch like on the main basics and how you can use the TDI to confirm the setups which you see on your chart. So remember the TDI, it's an indicator we use only for confirmation. So we are only confirming what we are already seeing on the main chart, right? So just to start off with the basics, if you're on the TDI, you need to make sure that you've got this 50 level here on the bottom right. Just make sure you put a bold horizontal line here. So if you notice, normally on your chart, it should be looking like this. It will just be plain. So what you want to do is you want to put a horizontal line there. Then you just want to edit the properties, go to parameters, make sure it's on 50.0, right? Also make sure that it's visible enough. So I selected option number 3 on the thickness of that horizontal line as well, so that it's actually visible. All right. So once you make sure that it's visible, that 50 line, this 50 line here, it's called, I usually call it the 50 static or the static 50. It's the 50 level on our indicator and it's static because it's fixed. Then the next thing you want is to make sure that on your baseline, the baseline's job is the same as the static 50. The only difference is the baseline is dynamic. It moves with the TDI like this. So the job of the 50 static and the job of the yellow baseline on your TDI is just the same. Okay. So that's another point. Then the third point is if you see the whole TDI indicator, which means the blue volatility bands, the yellow baseline, the green price line, and the red signal line, if they are trading above the 50, if the whole indicator is above, it means your price is bullish. You only look for buys on H1, 13 EMA. If the whole indicator is below the 50 static, if the volatility bands, the yellow baseline, the green price line, and the red signal line, if they are all below this 50 level, you start looking for sales only on H1, 13 EMA. I'm just saying 13 EMA here because on the 13 EMA, that's where the best setups form based on our trading strategy. So if the whole indicator is below the 50 static, it means we are in a downtrend. So we are only looking for sales. And if the whole indicator is above the 50, we are in an uptrend. We are only looking for buys, right? These are the basics. So if you only apply these basics, your confirmations will become a little bit more clear. So before I even go far, this is C1000. I want you to notice that price from this high, we are creating a lower low, lower high, lower low, lower high, right? By the time price gets here on this area here, the whole indicator is now below the 50, right? So remember, if you are below, it mainly shows you are in a downtrend. So if you're in a downtrend, wait for price to retrace back into the 13. So whatever we are seeing here, if we are seeing a sell, if TDI confirms something, then we execute. Here we had a nice M pattern with a candlestick closing below the 13. So remember also to always wait for an M pattern on H1. H1, wait for M pattern, and always wait for a candlestick close on H1. So as soon as we get a candlestick close on the second leg, TDI is trading below the 50 static. That's a confirmation that we are in a strong sell motion. So if you enter your sell, you can just hold for at least 50 to 100 pips. Why 50 to 100 pips in this example? Because the market is trending. So you can see from this level to this level, we had price actually moved a clean 100 points without even a major retracement. All right. So let's look for another example. At this point, the whole TDI was now above the 50 static, right? So that shows us that we are confirming that price is actually in an uptrend. So let's say we miss this first leg. This is the second leg. We get a pin bar right on the 13 EMA. That means TDI is confirming that we are actually in an uptrend. The next thing we are just going to look for is price to interact with the 13 EMA and give us a candlestick we know so that we can execute the buy. So I'm just talking about both buys and sells, even though we only sell the crash. Why? Because I just want to show you how the TDI works. We're not really talking about how price is moving. We're just talking about the confirmations. So again, the whole TDI here is below the 50, which was somewhere here. So price actually moves sideways. You've got 1, 2, 3, 4, 5 hours. In the sixth hour, that's when we get a bearish engulfing, followed by a pin bar, followed by another pin bar here. So depending with what you would have viewed as an M. So remember, if you're selling, you want an M pattern. So you want to locate any places where your price is creating the first leg, second leg. So if you had seen this as the first leg, maybe you might have missed this particular setup, which is still fine. So you only want to take trades on things which you can actually visibly see. All right, coming to the next asset, C300. At this point, the whole TDI indicator is below the 13. Sorry, it's below the 50 static, and our price is below the 13. So we start to wait for pullbacks to the 13 EMA. So here we get the first leg, second leg, with almost looks like an inside bar type of candle, like a pin bar type of candle. But anyways, the sell was confirmed here. So let's calculate how many pips the price actually gave. The price gave about 50 pips. So remember, it's always 50 to 100 pips on these setups. If you can take 50 pips, that's perfect. If price continues dropping and you take 100 pips, that's still perfect. So again, the TDI remains below. So here it sort of comes up a bit, but still stays sort of below the 50 static here. That means any interaction with the 13 EMA is what we are paying attention to. If we get any pin bars, dojis, bearish engulfing, or inside bars, we are looking for sells. 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 Up until now, you can see the price is still respecting that area. This is C5. It's actually been frustrating me today. Why I'm saying so is because I've been trading this asset from here up until here. All these trades, price kept taking me sideways, and initially my stop loss was taken out here. Then the price actually melted. They came back into the same zone. So there is no expansion. So this is actually good to know on an example which I'm actually explaining, so that you know that it's not all the 13 EMA retests which are going to expand. Sometimes price will frustrate you like this. So at this point, you can see we've got multiple points of interest, including the 50 EMA, which is a dynamic resistance, the 13 EMA, which is an area of retests. This is now the 15-minute, right? And on every retest, we've got a reason to enter because price action is actually showing us nice candles for entries until, of course, it took me out here. But if your stop loss maybe was a bit outside, maybe your trade survived. But if you're taken out and managed to get back in here, maybe you managed to scalp some pips. But this is one of the examples where price actually is just going sideways. So the most this trade paid out was just 20 pips, as you can see. So right now it looks like it still wants to drop, but I'm no longer participating in this trade because I feel like there's not much volume which I actually want to see going to the downside. So this is what you should know. It's not every setup which is going to give you 100 pips. It's not every setup which is going to play out. Some setups will hit break even. Some setups will hit your stop loss. That's why we always trade with calculated risk. So going to the next asset, I'm just using H1 as a default time frame. Here you can see this one is choppy. This is choppy price action. There's nothing we can do with this price, literally nothing we can do. The past 3 days, TDI, although it's sort of above, but there's nothing clear here. I wouldn't advise you to trade such markets. So let's just scroll back. Let's see where the TDI is either above or below. So on this example, let's see. No, 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 no. Okay, it's a wrong example. But let's see here. Still nothing too solid. Maybe if you consider this part, remember you're paying attention to candles on the 13 EMA. So if no candle gives you a reason to enter, you don't enter. But if you enter, let's say for example here, and price takes you out, that's part of trading. That's part of trading. The losses will actually happen. You just need to make sure your risk is calculated. So this one is not really moving too good. This is C3. That's why I always say C3 is a dangerous asset to trade. You can see even the TDI, the patterns I'm seeing right now as I'm back testing, they are just wild. For me, these are very, very wild patterns. But anyways, at this point here, we had the TDI coming, the whole indicator coming above the price point of 50, which is the 50 static here, right? We came above. So now we're starting to look for 13 EMA rejections. Here there was a lot of momentum. So if there's a lot of momentum, use the next smaller time frame for 13 EMA retest entries. So M15 should be able to give you some buys here. Although the price was not expanding as much as we wanted to see, it was still an uptrend. Another 13 EMA interaction here. Price was still trading above until we got maybe somewhere here. That's where the indicator started to show that price is actually starting to push down, and you can start to ignore this and start to look for something else. So this is just another example on C300. Let's see. This asset is wild, guys. If you're trading C300, you should just be careful with it. It's a wild asset. Here's another point where the whole indicator comes above. So from here, we're starting to look for a close above the 13 EMA or pin bars. Close above the 13 EMA or pin bars. We had a bit of a stop on here, but we had a nice W here. This is a multi-day W, the first leg on this day, the second leg on this day. So it's a bit of a high probability trade if you actually understand how to use TDI to confirm your price. So you could still also buy the crash if you're confident with your balance. With your capital, you can still buy the crash, but just know the crash 300 especially, just know it's a very volatile asset and it can easily blow small accounts. Okay, going to B1, you can see from here we're trading below the 50 static. That means we are not looking for any buys at all, right? 13 EMA, price is selling. 13 EMA, price is selling. 13 EMA, price is selling. Why? Because the TDI is simply showing you that it's trading below the 50. So it's confirming a very strong downtrend happening here. Until we start coming back above, we don't look for any buys if the TDI is like this. All right. So let's see a part where the TDI is up. This is almost. But if you had missed buying here, maybe you might have caught the buy somewhere here. That's still fine because the TDI here was above the 50 static. But again, you should actually try to catch this move as it starts, right? Because if you try to catch it on the last move when the day is about to end, usually that's when the intraday reversal actually happens. So always try to enter your setups a little bit earlier. So let's see if we can pinpoint another example. Okay, I think I've mentioned a couple of examples whereby you can actually use the TDI to confirm whether you are in an uptrend or you are in a downtrend. So this is now B1000. Let's see if there's any example here. We've got a bit of an example here. Although price came up a bit, perfect example, I think it's here. So the whole indicator was now below the 50 static from right here, from somewhere here. So you can see each time you see your indicator below the 50 and you are on the booms, just know that you are not looking for buys on that particular day. So for example, here, price was actually selling. So sales are happening right on the 13 EMA. You can see the pin bars there. So the tough part with trading, I believe, from what I have seen, is the patience to wait until you see these candles. That's what kills many people because many people don't want to wait. Many people just want to jump and chase price, So price ends up eating into your capital. By the time you get the better trades, your capital will be finished. So just try to use this indicator to help you figure out whether price is uptrending or is downtrending. So from this beginning of this level here, you can see the whole of the TDI was now above. So we are looking for any interaction with the 13. If you see no interaction happening, but price continue to push up, just jump to your M15, then you will get the 13 EMA interactions. And the next day again continued with a little bit of a stop, and there price simply came. And again, there was momentum here because there is no M13 interaction. But that simply means the interactions were happening on the 15-minute time frame. That's where you can find your best entries. So to close it off with V75, we are looking for areas where price is below so that we can sell. So from right here, we do agree that price is now, the TDI indicator is now below the 50. So we are looking for any 13 EMA interactions. So when price is on the 13, you simply want to wait to get any familiar candlesticks. Then once you see a candlestick on H1, you jump to M15 to look for a pattern. Once you get your pattern, you execute your trade. So I hope that's clear. The patterns, I've already been speaking about them in most of the lessons. So I'm not going to go to any smaller time frames in this lesson. So this was it for synthetics. Let's quickly check on currencies and indices. So here you can see we are coming above, right? This is a sign right here. This is a sign for us that this asset, which is German 40, is currently setting all-time highs, all-time highs, all-time highs, all-time highs. So with what we are looking at right now, the TDI is now come above the 50 static. That means as from right now, I'm starting to look for price to interact with the 13 for me to look for a potential buy. Interact with the 13 for me to look for a potential buy until TDI shows a retracement. Let's say price starts to reverse or breaking structures, TDI should also start to maybe come below or do some other funny stuff. So I hope this is clear. On this part here, another example from right here. Right, this is where your indicators now are above the 50, right? It's somewhere here. So I'm now waiting for any interaction with the 13 EMA for me to look for buy. Any interaction with the 13 EMA for me to look for a buy. This day we were coming into NFP. That's why you see prices like this. This was pre-NFP. Then NFP happened. Then price closed. You can see then we opened with this gap. This was the Sunday price action. It's just been moving funny going into this news day event. So that's also something you need to be careful of. So while I'm there, I'm going to tell you something else which you can use the TDI for. It's when you get a squeeze. A squeeze is when the TDI just comes and squeezes itself like this. If a squeeze happens above the 50, you are looking for a breakout sell. From whatever price action you have here, as soon as you see the squeeze happening, just know that if it's happening above, chances are price will break out to the bottom, right? So let's see if we can find another squeeze here. No squeeze here, but you can see now, for the most part here, the TDI was trading above the 50 static. So we are waiting for any oh, excuse me. I'm waiting for any interaction with the 13 EMA, 13 EMA, 13 EMA. This day had no volume, right? Price moved into the next day. We are looking for the same thing. Interaction with the 13 EMA, interaction with the 13 EMA. This is a weekend. Interaction with the 13, 13, a little stop hunt, a buy, a stop hunt, small buy, another stop hunt. As we get to the 13 EMA, if you see your price below the 13 EMA like this, but your TDI is still above the 50. Just wait for the closes above the 13, then look for a continuation up. It's just as simple as that. So let's see, do we have another squeeze here? This is an example of a squeeze which sort of happened above, but we got a breakout to the top side. So again, you just want to pay attention to your candles. You don't want to just sell blindly if there's nothing showing you the sell. So I think that's a point you just need to note. You don't need to sell blindly if something is not clean on your main chart, right? This is a squeeze whereby half the squeeze is above the 50, half the squeeze is below the 50. So when you get a squeeze like this, just wait for price to break out to one of the sides. If we break out to the top of the TDI, usually price will actually be breaking out above. If you break out to the bottom of the TDI, usually price will just be pushing down to the bottom side. So that's again another way you can actually use your TDI to confirm your trends and your entries. Again, here is where you can see the whole TDI is trading above the 50, right? So when we're trading above the 50, what are we looking for? We are looking for any interaction with the 13 EMA on H1. That's where your entries are coming from. As long as this whole TDI is above, we are not worried of buying it when we are far here, unless of course there's a lot of momentum. Then you need to jump to M15 and look for the same retracement back into the 13 for you to actually buy. But otherwise, you're looking for these pin bars, these dojis on the 13 EMA, this bullish engulfings on the 13 EMA as your entry criteria or as your confirmation to your bullish bias. Then you just jump to M15 to refine your entry or even M3. So I hope this is making sense as well. So let me see if we can get another squeeze. This is almost a squeeze. So at this point, the whole TDI was trading below the 50 static up until here. So we are looking for any 13 EMA interaction. So from here, the first 13 EMA interaction we had was this one. So you wait for a close. If you see your price above the 13, but the whole TDI is below, just wait for price to come back and close below the 13. Then you can get your sell entry, right? A little retracement probably on the M15 in the continuation here. Again, here we came back to the 13, but on this particular price action, there was no follow through to the downside. The pushes down were not that powerful. And if you understand your patterns, you also know that this is a inverted head and shoulder pattern. So you're now looking for potential buys. And if you consider this a squeeze happening below the 50, if the breakout happens to the top, it also shows that your price will potentially break out for that particular day or that particular trading session. You just simply have to look for buys. So I hope this is clear, guys. I hope this is helpful. Let's jump to gold, H1. So this is mainly tailored for day traders. That's why I'm using H1. But if you're also swinging, you can also use like your daily or even H4. The same patterns are there. So let me explain them on the daily. So on the daily, right, where does our price come? Right above the 50 static. So we are now above the 50 static. We are looking for any pin bars, inside bars, bullish engulfing, doji, price coming back to close above the 13, pin bars, dojis for our entries until price then comes back below the 50 static. So that also shows that if you can understand what's happening on the daily, it will be easier for you to trade the smaller time frames because you are getting your main bias from your daily time frame. So when you come to your smaller time frames, you are now only looking for buys and no sells until the trend says otherwise. So again, this is another squeeze happening whereby half the squeeze is above the 50 static and half the squeeze is below the 50 static, which will bring me to my other point, which is the shark fin, this little thing you see here. So here, this squeeze happened half and half. You simply have to wait for price to break out on either side. So you might mark the equal highs which you see on your chart, mark the equal lows, then wait for a breakout. Soon as the breakout happens, same thing. You are just waiting for your price to retrace onto the 13 for you to actually take an entry depending with where your price will be going. But if you're waiting for a breakout, this right here will be your trade to enter. And you can see you had about 1, 2, 3, 4, 5, 6 days of bullish move. So out of these 6 days, you can even just catch one, but on that one day which you catch, you make sure that your price action is on point, your entries are on point, you maximize on that trade. If your normal risk is 1%, you can even go with 3% so that you don't have to keep trading daily. But again, you need to understand how price is moving before you even attempt to do what I'm telling you right now. So this brings us to the shark fin. A shark fin is simply a point whereby the green price line aggressively comes outside the volatility bands, then aggressively goes back inside. Usually, a shark fin shows a stop hunt. So whatever time frame you see a shark fin, if you see like price wicking on that area, creating a doji like this, it means price has completed a stop hunt here. So that means anyone who had stops here and was buying initially has been taken out and price is now expanding to the top side. Usually that's how I actually try to use this shark fin entry. So let's see if we can get any other shark fin. And again, this is on the daily chart. So with the shark fin, I'll also try to explain what we call the baseline bounce. Baseline bounce. What is the baseline? The baseline is this yellow line here. Remember, the yellow line is your dynamic 50 level. So if you get your price line coming below, then bouncing off that baseline with a shape like a shark fin, that right there is a confirmation of an entry. So if it happens on the bottom side, it shows a confirmation of a sell. If it happens on the top side, so price comes above and comes and bounces on the baseline, it will be showing a buy, right? So I hope that is clear. We are going to be talking about a baseline bounce now and a shark fin. So it's baseline bounce and a shark fin. So let's just scroll. This is still gold. Let me actually go to the H1 for day traders because this course is actually for day traders. So let's see what do we have here. Any shark fins, any baseline bounces. Some of them I'll miss them because I'm scrolling fast, but you guys can still back test with this indicator. Then you can tell me what you see. All right, what do you see here? Do we agree that price had created a high? This is a weekend. Double lines are a weekend. This is a Friday high, and this was Monday. So do we agree that price has set a high here? Divergence setup. These are just things coming together. So we've got divergence. Price creating higher high, but TDI creating lower low, sorry, equal lows. That's divergence. Price is now below the yellow baseline in the 50 static. Then they come to bounce off the baseline. So that's a baseline bounce. What is it confirming? It's confirming to us that price has actually bounced off the open price of Monday, which is an order block or a supply zone. We also have the open price of Monday, and we have a bearish engulfing candle. Soon as this bearish engulfing closes, that's when the baseline bounce confirms the price has got higher probability of coming down. So if we are selling, where are you going to take profit? You're going to take profit on the first low you see, which is here. You're also going to take profit on the next low, which you see, which is here. You're also going to take profit on the dynamic support, which is the 200 EMA. And when we got there, price actually gave you a doji to show that this move is now complete and can potentially retrace or reverse. You get it. So this is an example of a baseline bounce confirmation. Perfect for day traders. I think this was actually probably London session going into New York for that particular day. This was the 27th of January. If you want us to go deep into this setup, maybe we can go a little deep into it. Let's see. So when I'm dissecting a setup, I switch my charts to trading view. So this was the 27th of January. H1 is closed and we are now looking for a sell. Now I'm going to show you how you actually look for the entry. So this is the 29th of Jan. I just hope this is actually 2024, so 2025, because I don't want to scroll so far. Okay, 27th. Then we're going to jump to trading view. We are going to go onto gold, H1. Make the screen bigger. Okay, what day was it? I think it was the 27th, right? So the 27th, I'm just going to zoom in so that you guys can see. So if you want to start this analysis from a daily chart, let me just put everything into one so that you guys can see how we can do multi-time frame analysis to come up with our setups. Okay, these the candles. We're looking for the 27th of January, right? 2025. I don't know how we got all the way back here. Okay, I think I saw the 27th here. Okay, this is the 27th right here. So let me remove this so that it doesn't show here. Okay, so what would have made us want to sell this trade? You can see gold was strong bullish, but remember with this particular bullish move, price was simply creating higher highs and higher lows. So if you put a line chart, you see higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So after the last higher high was created, let's turn back to candles. After the last higher high was created on Friday, I want you to notice this price action here. So price has expanded from the 13 EMA to create a higher high. So initially, this was the first higher high here. Then the next day, which came, price sort of came into this imbalance with this wick, which is what I consider a stop hunt. They extended the high of this day, but then through this week. So as soon as you see these rejections, you should be open to seeing a retracement. And if price is going up, it moves in waves. So already we were in anticipation of a potential what? Retracement to the 13 EMA, which was running close by here. So on this particular day, we are not selling until this candle starts to turn black, right? So that brings us now to H1. So here we had a potential of a retracement, which means our trade is not something which we want to hold a long term, but it's something which we're just looking to trade into a retracement zone, forming a higher low on the daily chart. So let's come to the 27th. When we come to the 27th, we know we are not taking a long-term sell here. At what point do we start selling? We start selling this soon as the open price for this day is broken. So the open price for this day was around here. Just stretch that into the future. Then you notice that when that bearish engulfing candle closed with this baseline bounce confirmation, the daily candle had now a little weak, and the candle body was starting to turn black. If you don't understand this, you need to read on candlestick formations, right? So as the daily candle was turning black, now where do we enter? So this was towards the open of New York session. As you can see, New York session is this gray zone here. So after H1 is closed, what I do is I go to M15. So we're going now to M15 on the 27th. Okay, sorry guys, I'm just going to be slightly slow in trying to move this chart. It's a bit hard if you scrolling through all these multi-time frames. So let's see the 27th, the 27th. We are looking for M15 price action in New York. What was our entry trigger? So usually for me, an entry trigger is if I'm on M15, what I want to see is, let me just zoom in. What I want to see is price actually showing me that it's breaking structures to my left That's the first thing. So I want to see a market structure shift. So if you notice our H1, remember our H1 closed somewhere there below that open price for the day, right? So already we've broken a structure here and we're looking for a potential retracement. So what I look for is this. If my price was coming up, I'm waiting for a structure to be broken onto my left-hand side. So price has to break something here, market structure shift. Then price has to retrace either into an order block here, which is that broken structure. Sometimes they will come to equal highs. Sometimes they will tap into a fair value gap. But I always pay attention to the 13 EMA. That's my best friend. If you follow my course or my sessions or my live trading sessions, you know the 13 EMA is my best friend. So from the 13 EMA now, I'm looking for price to retrace into the 13 with a pin bar. I need to see a pin bar. I need to see a bearish engulfing. I need to see a doji. I need to see an inside bar. Any of these four candles. So as price, the New York session opens here, it opens with a doji. There's nothing too clean bouncing on the 13 EMA until price breaks the low of the previous day, indicated with this red line here. Then gives me like a doji type of pin bar. This is the only cleanest entry I have based on M15. But soon as I close this bearish engulfing, now I'm not sure if I can go to the 3-minute because that's usually my time frame of entry. So remember, again, let me just touch on this. H1, I was looking for price to actually reach these lows first, and then to potentially get to the 200 EMA on the H1. So this is the 800 EMA on M15. So I have my target. This is my TP. This is my TP. All I needed before price got here was an entry. So it's either I would have looked for an entry on the 3-minute, which I might have found here, or I would simply have waited for this break and retest of the previous day's low, which is now a zone flip or a flip zone setup. So if you also have watched the course from the beginning, you will understand this, or basically a break of support and retest of that same zone which is broken, which now becomes a resistance. It's just different terminology, but the same thing. So these would have been the entry criteria which I would have been waiting for. So let me also do this. Let me see if I can actually go all the way to my entry time frame. I'm going to mark the TP2 zone so that we don't lose it. And I'm going to mark the TP1 zone. Okay, guys, I'm not sure if this video is going to start from the beginning or what, but I was recording, then my Zoom just cut off. Then it reconnected. So I'm not sure if I still have the data from the first part, but I actually swore in between when it cut off. So please, if you had me swearing there, please forgive me. My bad, my bad, my bad. Okay, so let me quickly scroll to the 3-minute. I just wanted to continue explaining my entry, which I would have taken if I was looking at that price action on the 27th of January 2025. I had also mentioned that if any of you knows how I can scroll back in time faster than this, please do let me know, because this actually is a bit annoying scrolling like this. But then I know people don't have much time to like watch videos, because this video now ends up becoming a little bit longer because I'll be wasting so much time scrolling like this. But anyways, we had marked our TP1 and TP2. So on the 3-minute, what am I looking for? I'm looking for the same thing. I'm looking for price to retrace into my 13 EMA and give me a pin bar. Give me a pin bar, doji, bearish engulfing, or inside bar. So what I want you to notice is, soon as the M15 candle I mentioned on the gold when New York session opened, soon as it closed, I'm now waiting for any 13 EMA interaction with the candles I just mentioned. So I'm looking for a bearish engulfing entry, doji candles, pin bar candles entry, pin bar candle entry, followed by a bearish engulfing entry, a break of yesterday's high, which is this red line, and a pin bar rejection entry. These are all areas where I could have entered, right? And where could I have taken profit? We already marked our take profit zones as these two gray areas you see, this first one and this one. So if you had not used any M15 candle up until the previous day's low was broken, and you had entered at the pin bar or the retest of the yesterday's low, which was this level here, this is how your setup would have been looking like. So we are assuming you've missed all the entries at the top, but you've seen this pin bar here. Your stop loss goes just above the high. First take profit would have been this low, but again, this low had been broken, so you were looking forward for this next low, right? So it would have been an almost 1:2 setup. But looking forward for price to get to the 200 EMA on H1, your take profit now would have been 1:5. You see, so you see where this setup is coming from. This setup is coming from an H1 baseline bounce, which has been confirmed. And we've gone down the time frames looking now for an entry criteria or something which allows us to enter the trade. Then once we see something familiar, we enter the trade, we hold, and we execute. So normally my setups are 1:3. I don't really hold this long. I usually just go for 1:3. So this setup would have been this long, and I would have been done for this particular day. And this would have been my New York session entry. So again, I'll say it's easier to take trades if your market is trending. All right, what do you notice here? Let me leave this as a question to you guys. I think I'll actually post this on YouTube. This is part of my course of videos, guys. I'll show you where it's actually coming from if I haven't already. So this is the 50 static. I've been speaking about this on the TDI. I've been mentioning this from the beginning of this lesson. We are mainly talking about the TDI. We said something happens when the whole TDI is below the 50 static. So your 50 static is this black line in the middle here. So what do you see? What happened here? I'm going to leave this so that I can check if you guys were actually watching this lesson until the end. What do you look for on your chart if the whole TDI goes below the 50 static? What do you look for? That's my question I'm going to leave with you. What do you look for? This is the entry I would have taken, but there's also 1, 2, 3, 4 more entries before the price got to the actual TP. So if you tell me what we were looking for, you're going to get a 50% discount on the course if you haven't purchased it already. Just tell me what we would have been looking for here. I've mentioned it from the beginning of the session. When your TDI the whole indicator is below the 50 static, what do you look for as an entry criteria on your chart? This applies from all the time frames. And when I was explaining, I was on H1. Now we are on M3, but we look for the same things. What do we look for? So you are going to answer what we look for. And if you need the course, if you get the answer correct, you are going to get yourself a 50% discount on the course, and you get a 50% discount on the mentorship as well, depending with what you want. You're going to get that 50%. So this was my example, which I just had to elaborate deeper into coming all the way from the H1. And I even showed you guys what you do starting from the daily, what you look for. And by the time we go to the 200 EMA now, let's go to back to M5. By the time we came to the, okay, what did I press? What did I press? Okay, sorry about that, guys. By the time we come to the 200 EMA, that uptrend which we're seeing actually started to continue pushing up from the daily time frame. So this is the sell we actually got based off this baseline bounce. So that question is going to stand, guys. If you answer it right, that's a 50% discount for you. So let's round up here, looking for a shark fin and a baseline bounce. Here we got a nice shark fin here, which was this candle right here. Here again, we are trading back to the 13 EMA. So trading against the trend is something I don't advise if you're a newbie or someone who still doesn't understand how price moves, please don't take counter trend trades. So I wouldn't really want to explain much. But if you understand price, these are the times when you want to trade back to the 13 EMA, especially if your price is way too far away from a 30 EMA, you can still look for a trade coming back to that 13 EMA. So let's scroll back, see if we can get another shark fin. Trying to look for clean ones. So remember, the best shark fin happens when your price is created either a higher, there has to be a higher high or a peak point or a turning point of price on your chart to actually show a shark fin. So let's talk about this, for example. This shark fin happening here, you can see this was the lowest low, which took out something to our left. Now we found support on the 50 EMA. So that shark fin is confirming something. So looking at this, our trend looks like it's already been what? Bullish the past 2 days. This is just a stop hunt. Like I said, price continues pushing up on its merry way. So a shark fin most of the times shows stop hunts. So you want to pinpoint any shark fin, which is like on the extremes. This is an example of a retracement. So you are trading back into the 13, more or less like the other example, which I just showed you guys just now. So let's see, do we have another shark fin or baseline bounce? This is an example of a baseline bounce which does not follow through. So usually you want to see your price expand again to the top, but this one you can see they did not even come up here. So this is one example where price will actually take you out, even though you've seen a confirmation. But again, let me just say this setup would have depended with how the daily was looking, because remember, that's where the main bias comes from. So if your daily chart shows you something, if it's unconfirmed on H1, then that means there is nothing. There is totally nothing. So let's see. Okay. We do understand that these double lines are the weekend. So this is Monday, Tuesday, Wednesday, Thursday, Friday. So we can see on Thursday, we had this high and we had this shark fin. Shark fin equals stop hunt. So if this move was a stop hunt, this was the last normal high which the price had. So if we're trading on Friday now, we are looking for any areas where price is going to bounce off, showing us a sell. So if price is above your 13, you're waiting for a close below for you to sell, As you can see here, we've got two entries, one in Asian, one I think it's either London or New York, and both were confirmed by baseline bounces. So any baseline bounces which follow a shark fin are always also high probability trades. So this is a day trading strategy. The time frames I'm explaining are for day traders. So if you are a swing trader, you need to use the same thing, but on the higher time frames now. So again, another baseline bounce here, which was equal highs here. So on the next day, if we're anticipating a baseline bounce here, this is a variation where price comes slightly above. And if you notice here, what was happening, we had a liquidity sweep. So when you're coming to the charts, you just need to have everything you know about trading. You just need to come with it. So as much as we are looking for confirmations on the TDI, you will notice that everything else we've been learning from order blocks, the yesterday's highs, yesterday's lows, the importance of those zones, importance of the previous week high, previous week's lows, the importance of those zones, equal highs, the liquidity points where price swipes above those equal highs with pin bars, then simply comes back below. All these things we've discussed them, and those are the things you need to show up with to the charts when you are trading. So once you show up with your bag full of tools, all you're waiting for is TDI to confirm what the chart is showing you. So if you figured out that this was a liquidity hunt and you waited for a 13 EMA close, by the time this closes, this TDI is already somewhere here. So you will see that, okay, shit, this is a variation of maybe of a shark fin. I've got the baseline bounce which happened on Tuesday. This is Wednesday. price has created a higher high, which has taken these highs but came and closed back below the 13. TDI was steady, trading below the yellow baseline. That's a sign maybe that I should actually hold on to this sell which I'm seeing, because TDI is actually confirming it. So again, this is a clean example of a TDI baseline bounce sell. And again, the target is always the first low you see. Next target is, if there's nothing else to your left, you can just use the moving average as your target. But just know that sometimes price will not touch. That's why I always try to just go for a 1:3. Whatever you're risking in there on your 15 minutes, on your 3 minutes, just risk one part to make three, call it a success, and call it a day. So meaning in these 3 hours of drop, you were only supposed to catch a move maybe in here, or maybe catch a move in here, or maybe catch a move in here for your day to be a success. You don't really want to catch the whole move for the day, right? So again, another example of a baseline bounce, which was right here. So after you get it close below the 13, you see TDI confirmed. We did, however, have a pin bar on the 13 EMA. But if you've gone through this course and you see a pin bar on the 13 EMA, you already know what that means. That means money. I won't get much into it. If you guys need this day trading course, please do get in touch. I think I'll drop the link in the description so that you guys can get in touch. If you want the mentorship or the course, just join that link. It will take you straight to the mentorship course, whereby I'll get in touch with you. Then you can let me know what exactly you need. And before we have you even pay for anything, we can have a one-on-one Zoom so that we see where you are lacking. Then after that, we take it from there. So don't forget to answer the question I asked you guys a couple of minutes ago to get access to your 50% discount. So I think that's it for the TDI today. Maybe if I'm feeling a bit good, I'll do another one. There's a lot of things to explain here, but I just thought let me touch on the basics, because I realized the first lesson I did not quite deliver the main points which I actually wanted to share, which is the points I shared with you today. So thank you so much. If you watched until the end, thank you so much for joining. Let's meet in the mentorship group. Enjoy the rest of your day and enjoy this course. Good trading.